And in our top business story, the value of the UAE's direct total foreign non-oil trade totaled 524.7 billion dirhams in the first half of 2014, according to official preliminary figures released on Sunday. The Federal Customs Authority said it showed an increase in trade but did not give a figure for the first half of 2013. The latest statistics included imports of 340.1 billion dirhams, exports of 63.3 billion dirhams, and re-exports of 121.4 billion dirhams. The FCA said that the UAE has continued to strengthen its preeminent position on the world trade map and expand the role it plays in facilitating trade between countries during the first half of this year, driven by the increase of activity in all economic sectors. Asia, Australia and the Pacific region maintained its position at the top of the list of the UAE's non-oil trading partners with 42% of the total non-oil trade value, followed by the European region at 27% and the MENA region with 15%. Saudi Arabia was the UAE's biggest trading partner in the Gulf region during the first 6 months of the year with 36% of the GCC total, followed by Oman, Kuwait, Qatar and Bahrain. The FCA preliminary statistics also revealed that native gold and semi-processed gold were the most commonly imported goods by the UAE, followed by vehicles and non-composite diamonds. House prices in Dubai showed no increase during the third quarter of 2014, the first time since Q2 2012 that there has been no quarterly rise, according to Colliers International's Q3 2014 Dubai House Price Index. The index recorded no change at 170 points and is compiled using actual mortgage transaction data from a consortium of financial institutions. It also echoes other recently released reports analyzing data for Q3, which has shown that the measures introduced by the government to dampen property speculation at the end of 2013 are now taking full effect. Colliers said different unit types recorded minimal changes in price quarter on quarter, with apartments decreasing by 1%, townhouses increasing by 2%, and villas remaining the same. The year-on-year results, however, revealed robust growth, with apartment sales prices increasing by 9% year-on-year, townhouses increasing by 23%, and villas increasing by 20%. The report also pointed to a number of other factors influencing the real estate market, including the capital gains tax and overseas investment implemented by the Indian government and the fluctuations in the value of the ruble. Property developer Nakheel has plans to award contracts worth 7 billion dirhams in 2015 compared to 5.3 billion dirhams in 2014, according to the company's chairman Ali Rashid Luther. According to local reports, the majority of contracts will be awarded in the first quarter next year, starting with a 1.7 billion dirham contract for Deira Islands Mall in January. The Nakheel chairman also revealed an extension of the Ibn Battuta Mall and that its tender will be awarded in the first quarter of next year. It will be a 500 million dirham contract to add 640,000 square foot of leasable area at the mall and will include a multi-story car park at different locations of the mall, with the extension expected to be completed in 18 months. The Dubai developer is looking for 10 million square feet of retail space in the next 3 years. That includes 2.85 million square feet in shop space at Deira Islands Mall and its total shop space of 2 million square feet in Ibn Battuta Mall. In the next 3 years after completion of the announced projects, Nakheel's retail portfolio will be 3 times bigger than the Dubai Mall, with the company projecting 7.5 billion dirhams in leasing income in the next 3 years. It was a volatile week in the financial markets as continuing developments from Russia, slipping energy prices and the FOMC meeting minutes announcement formed the backdrop for a highly volatile week in the markets. Following crude prices, which dipped to 5-year lows, the FOMC in their most recent meeting minutes maintained their dovish stance regarding the future of US interest rates. As a result, US equity markets got a nice boost, while the US dollar index continued its move towards 90 levels. A lot of the recent turmoil in the markets has resulted from the economic uncertainty emanating out of Russia, and although the Russian central bank hiked interest rates to 17%, the Russian ruble remained under pressure. With the Christmas holidays coming up, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East, to get his views on the markets in the week ahead.
Well, following a rather eventful week in the financial markets last week, we can expect a little bit more of a calm session in the lead up to the Christmas and New Year's holidays in the week ahead. Overall, we have a very, very light economic calendar. Tuesday sees the release of the US third quarter GDP that's expected to come in at 4.3%, above a previous reading of 3.9%. But more importantly, we'll be watching the personal income and personal spending numbers, both expected to come in at 0.5%. Now remember, personal spending, consumer spending makes up about 60% of the overall US GDP reading number. So we're going to have to see a strong figure for November to see if we can get more insights into the performance of US output. Remember, the US figures have been coming pretty strong of late. Overall, the FOMC does remain extremely dovish following their meeting minutes last week, which is what led to a stronger US dollar. But overall, we can expect the US dollar index to continue to find stiff resistance at 90 levels. It's currently trading at 89.50 levels. If we look at the rest of the markets, we're expecting the Euro USD to hold strong support at 1.22 levels in the week ahead. Gold looks to be having a stiff resistance at 12.02. That's the 50-day moving average. We're expecting it to probably close below these levels in the week ahead. And of course, crude oil, following its major slip from last week, we're expecting it to probably test that channel of 60 levels in the week ahead. And finally, the Indian rupee has also come through a bit of weakness. We expect the USD INR contract to probably find support at 62.50 levels in the week ahead, with upper resistance at 63.50 levels. What does that mean for DGCX Indian rupee contracts? That means we can expect to see support coming at 157.50, with upward resistance coming at 160 levels. But overall, traders will be moving away from the desks come Christmas Eve, and we expect volatility to slow down a bit in the week ahead, with trading conditions to be slightly liquid. But overall, we expect to see these trends in the week ahead.